Hey everyone, how's it going? How's Monday treating you so far? Let's see how many people we've gotten here. Oh, not too bad. Hey JJ, good to see you. We'll see what Chris thinks, but I'm a little skeptical of the bounce so far. I'm still neutral on this market. You know, what we would have to get probably even further above this purple line for me to get bullish. For sure, we need to cross back up above that MA50, and that EMA8 would have to cross back up above the MA50 as well. So we're not just talking about a cross above here. We need at least a couple days above here for that EMA8 to drag up before I start to get semi-bullish. I'm still very, very neutral. Hey, Chris, how's it going?
What's up, Kane? Happy Monday, man.
Happy Monday.
What's the latest? Need some confirmation to get bullish?
Yeah, I was just telling everyone that I'm still neutral on this market.
Yeah,
We have a little bit of gap up and run today, but it's a holiday week, and
correct.
there's a lot of volatility still in this market, and I'm just not convinced yet. How about
I
you?
agree. I think that price action can be a little tricky through the holidays. It's usually much lower volume. There's a lot of drift that happens in the day. Like today's kind of a good example. It's a little chop in the morning and then just kind of drifted. Like technically today's move at 67.10. I mean, we started out trading like a 10-11 delta this morning on SPX, and that's how far it's pushed. So this is kind of outside the norm. I mean, we expected like a plus or minus 46 in the day, including the
Yeah,
gap. And we're up about 70 plus points for the day. So this is what can happen when it's like nothing's really on the other side of this trade outside of maybe some catch up. And if you look at I wanted to ask you, do you take any like kind of interesting correlation between like the October 10th candle and the November 20th? It's kind of scary how they're like the exact same candle.
yeah,
Yeah.
yeah. I mean, I did notice that. I have been paying attention to that. This one is a little bit bigger than this
Right.
one, both on the high and the low, and
Correct.
so that's another sign for me that we're probably just going to chop in between these levels
Sure.
because they're basically the same levels as before.
Yep. Yep. Do you think that it's possible? Is it possible that the market could basically use those 2 days to just de-risk and de-leverage? Like as far as like behind the scenes where big money is at, do you think that's enough of a type of flush to like de-leverage and de-risk the markets a little bit?
I think so. I
Yeah.
mean, I know institutional money. If I was still managing institutional money, I'd definitely be taking off risk.
Right. So does that also mean that this, 2 day recovery, is this a deleveraging and a de-risking time, like to just kind of lower some equities exposure, kind of let price prove that it wants to go higher versus like assuming that it will? I mean, we only
Yeah,
pulled back like
yeah,
just over 5% from the highs, right? We were just over
right.
5% from all-time highs. With Friday's low, yeah, 5.8%. And the Nasdaq
Yeah,
was a little bit more. Nasdaq was, I think, high single digits, but Nasdaq I've got from the Friday low. We spiked to about 8.84% from peak to trough, from the all-time highs. This is QQQ. So, Nasdaq's a little bit more volatile, recovering, but watch those candles closely. This week we have limited trading on Friday. Markets are closed on Thursday. Day to day could be really interesting if we don't make it. So what's kind of the price you need, Kane? Do you need price to be like above? You want to see price close above that Nvidia candle sell off day, the 20th?
yeah. That's one sign. I was just telling everyone that I'd really like to see that fast EMA cross above the 50. So
Okay,
I'm using EMA 8.
gotcha.
But if we did get all the way up here, that would come pretty close to
Yeah,
to doing it. Yeah.
yeah. I think a close above that would be some pretty good proof. If we're closing above that candle and like the next day or so, it's like positive gamma is in our kind of day to day price action, then I
Right.
think we're probably closer to drifting higher and possibly getting back to the highs again. However, I am concerned that if we go right back to the highs, we haven't learned anything. I think if we go right back to the highs,
Right.
I don't know how much momentum is left to the upside. I feel like it's just going to be maybe this consolidation through the holidays, which again, it's nice to know that the consolidation could be like no more damaging, like 5 or 6%, but it's also really, really difficult to assess what is 2026 going to look like. What type of clarity does the market need in 2026 to then, push higher? You know, any thoughts on that? Like if we go right to the highs again, are you bullish? And if so, like, do you think we're stretching to 7,000 plus?
I would have to see breadth at that time. If we're still
Yeah,
very
good point.
concentrated
Yep.
in like AI type of stocks, then no, for sure not.
Okay. Let's see. Speaking of, I mean, it's really not impressive. I mean, S&P breadth is back at 39%. So we had lows at 31, back to 39. It's just not an impressive charge. There's some defensive rotations last week. Walmart had a really good week. We're seeing healthcare space do really well. I mean, I don't know. What's heat map today? It's probably mostly advanced. I'm showing 64% of stocks advancing. You got some
Yep.
big names, Mag 7 doing pretty well. Yeah, I mean, it's all led by all the big guys. Google's up to fresh highs. Amazon, Tesla, Broadcom, Nvidia, Meta's up. Meta's up to 613. Let me check on something. I've got a debit spread on Meta. I did it out to December, but maybe we're breaking. It's up 30. Let's see here. So we're about 14% on that trade from Meta. You mind pulling, since you have the
You want
screen,
it?
can we just
Here,
bring
I'll
up a
give
Meta
you the
chart?
screen. Yep.
No, it's okay.
Oh,
As I was gonna say, it's fine. Just keep it. Meta. So we did a 610 by 615, and I mean today's a pretty good candle. So for safety's sake, considering we have the lows at 582, I don't mind just closing this trade out for a small winner. 240 debit for a 260 winner, but we got to stay above 615 all the way through December 19th. If there's any flinch in this market and there's any flinch to these Mag 7s, I mean, the low is 580. We're way off that low. I mean, I did a 610 by 615 to fill this gap, and price didn't really respond like I wanted to right away. We drifted lower. So all I'm saying is I'm going to be a little bit cautious, because if we return back to this low, we're taking on heat. There's also gaps down here. I mean, we could have a 570 to 550 if the market doesn't hang in there. So I'm going to go ahead and take this off. If anybody's in, I think we took that trade during Gamma Report, or it was in my YouTube sessions at the closing bell. Let me see if I can close this out for like 35 or 40 bucks. So 240, see if I get like 280. Let's try like a 275. Maybe I'll try 280 first and see if I can sneak out 40 bucks. I already have a closing order. Okay, let's try 280. Come on, be generous. 280 didn't fill. Let's try to get just above the mid price if we can. 279, 278. This is definitely not a big win. I'm just playing a little defense here. I sold a lot of premium last week. Kane, I've got an interesting trade for you. So last week when the VIX was up into like 25 plus, I sold a S&P, so a SPY and a Q ratio spread that ended up grabbing, I think I grabbed $2.50 on one and $2.43 on the other. I would literally own the S&P and the NASDAQ at over 50% lower than where they currently are. I was like, dude, I'm taking this trade all day, and I would gladly own a chunk of shares at 50+% off. So I posted that for, all right, just got filled for 273 on that trade. I'll bring up the chat if anybody's in that trade with me. So this is just a Meta trade. So it was a Meta bonus trade, entry 240 debit, closing 2.73 credit, taking a small profit, taking a small winner. Okay, and I'm just doing that to defend, because if we come back down and retest the lows that we just saw recently at 583, I'm basically $30 off my strikes. So, recovery is great, but there's a long ways to go, and there's also a lot of time left in that trade. So if there's any chop here, and we're looking at the S&P with an indecision candle, I mean, this week, because of the holidays, one thing that would be nice is if this market just kind of blindly marches higher. That would feel really nice to kind of go into Thanksgiving and not think about like this market is just on the brink of, we're below the 50 period. What does that mean? Kane, I did some manual testing this weekend for one of my new dashboards that I'm building, and it's amazing how just the rules of like, if price is above the 50-day moving average, be bullish all day long. When price is below the 50-day moving average, just wait. And it's amazing how much trouble you can avoid by just sticking to that. And it's like, I've got more to it. It's not just the one moving average, but like my macro dashboard is, a 50, a 144, a 200, and then I've got some short-term moving averages as well. But it's amazing how much you can avoid the problems and the trouble, because an indecision market, yes, indecision can turn back to bullish, and we assume that, the market wants to march higher throughout the years, but we could also stay below the 50 and then obviously go lower and go lower and go lower, and who knows? And so if Michael Burry for deregistering or delisting his hedge fund or non taking away his registration and launching a Substack in place. If he's right, it's like it's funny to me. Like I don't know if you saw that post I put in
I
Slack where it's
did.
like,
Yeah. Yeah. It was
yeah,
funny.
he's like he called 50 of the last two market crashes. But I mean, to be fair, it's like I know there's questions around how this AI like web is going. It does make me nervous. I took a screenshot of this last night. I think this was on X or on Twitter. Let me find out here. AI hyperscalers Google, Amazon, Meta, Microsoft, and Oracle have issued more debt over the last 3 months, $88 billion, than over the previous 3 years. Yikes.
Yeah.
That I don't love. I don't love that at all. I know they have a lot of cash. I know, but it's like to instantly go to raising capital and raising debt for this. I mean, I understand that it's not something the U.S. can afford to lose necessarily, but it just screams like you're putting just too much risk at higher rates and higher borrowing costs at risk. And I don't know. Again, it's just like all done in the private equity space where you don't actually have to go mark to market. But they're publicly traded companies, and eventually investors want to know, like, are they going to get return on capital? And it's hard. Like Oracle, especially. Like, who was it? Barclays that downgraded their debt because they said if they do this, they're going to run out of money.
Yeah.
Yeah, that
Well,
was with Oracle. So
yep.
anyway,
Yeah. All that has to happen is a rate hike, right? Where the Fed just goes, "Hey, we're
for
going to
sure,
start raising,"
for
and
sure,
it
man.
all
Oh my
pops.
gosh.
Yeah.
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 On that note, what are you making of now getting some data, getting some U.S. data? Are you just kind of waiting for it, print by print? Do you take it with a grain of salt, like anything with non-farm reaction last week? Like how are you kind of positioning for any type of news? Just price
Yeah.
action,
I'm.
or what do you think's
I'm
coming
waiting.
our way?
I'm waiting because if you look at FedWatch, have you been watching that?
Oh yeah, it
It's,
completely
it's,
flipped last week, dude.
it
It was the
was
craziest thing, man.
ridiculous. Yeah.
Yep. Here's the Fed Watch
Yeah.
tool that Kane referenced. So if you weren't paying attention to this, look at this. So just so you know, I wish I would have had a screenshot of this because last week, prior to Thursday, like I want to say like Wednesday at close or even Thursday morning before the market dumped post Nvidia earnings, the pause. So I'll just trace this in black. This was about 77%, and this was in the 20s, something
Yeah.
like this. That was
Yeah.
last week, literally on Thursday. It was
Yep.
the market's like, oh my gosh, the Fed is not going to cut. And then we have the big sell-off, and that was one of the biggest swings that we've ever seen from the S&P being up 1.5 in the morning to closing more than 1.5 lower. Like that
Yeah.
rarely happens. It was
Yeah.
certainly an outlier type day. But here we are, like literally a couple days later. That sell-off was Thursday, okay? And so Thursday, Friday, this thing pivoted into now what you see here is an 81% probability that the Fed is going to cut. So,
Yeah.
I mean, these are supposed to be some of the smartest people in the world, man, and they don't know what is going to like. They don't know what to do. And I get it that they're kind of backed in the corner, and there's a lot of things that are moving, but are we watching a Fed like right before our very eyes just making decisions based on lagging data and instead of like what the market is actually showing us? I mean, everyone that has looked at bonds and yields and PMIs and likely inflation is going to continue to get higher, but look at the jobs numbers as well. And I just think there's third party metrics that like give all the information that they need to see that we're probably too restrictive. We're on the brink of like a labor market suffering, in addition to having a layoff freeze in tech, or I should say a layoff like phase in tech. But it's just a big pivot. You don't see this type of craziness when like monetary policy is a huge driving force of the market. And when are they officially wrapping up QT? Like in December, right?
Yeah.
Yeah. So it's very possible that they start expanding the balance sheet. And Powell's going to step down in the next couple of months. So I don't think we get like a crazy dovish Fed person to take over, but I think it's going to be more in line with what fiscal and monetary policy are trying to align with. Will be accommodative of monetary policy, and I don't know. I get hyperinflation breaks everything. I mean, if we start to see inflation tick up to 4.5%, 5%, and that's actually coming in through the headlines, people will pay attention to that. But if it's just 1/10 at a time, I don't think people will pay attention. If it's 3.1 the next time we get CPI data, 3.2, I don't think people care. But if it's 3.5 or 4, people will care. So
Yep.
I think they're going to suppress the living crap out of that data, dude. When I don't even know what comes out. When's our next CPI reading? I have no idea. It's not this week, is it? Not during a holiday week.
Yeah, I don't think so. Yeah, or is
All right.
I haven't seen it.
Does anybody know when is if it's on the calendar? Let's go this week. So we have, like I said, limited trading this week. Um, so U.S. data, are you just going to be watching like general index and stock price action, or is there something where do you have like a fundamental dashboard of like how the U.S. data kind of falls into place since we're waiting for it to show back up after having a 40+ day shutdown?
I have a dashboard for liquidity. That's what
Okay.
I think is the biggest risk, right? If we're going to go down, it's going to show up in liquidity.
Okay.
So, but other than that, I'm looking for a price action.
Okay. So what's the liquidity dashboard look like? You using like, JNK, HYG, you doing some triple A's, B's and C's? Like, is that type of liquidity you're looking for? Is like credit spread widening?
That's on the credit side, but I'm also tracking crypto. I'm also tracking small caps like the ARK fund
Oh yeah,
versus
yeah.
IWM.
Okay.
So
Nice. That's what, how do you get the ARC versus IWM? Can you just do that?
yep.
Okay.
So it looks like it'll bounce today
So do you want to
with
see
everything
this? You
else.
want to see this going up and kind of leading to like more of the risk allocation towards ARC?
Yeah,
Okay.
if the market's going to be healthy, yes.
Yeah. Okay. I think small caps also need. I just saw this last week. I think this was in a podcast. Um, let me see if I got a screenshot. This to me again, it's crazy. I know that guidance for earnings has been pretty solid, but the expectations for small caps next year are staggering. Let me see if I can find it. I want to say lots of pictures here. Um, see nominal GDP, capex spending. Okay, so realize the consensus EPS growth for selected U.S. equity indexes. Next year, the Russell is forecasted for a 59%, or no, just 59 times earnings
What
next year.
the heck?
Like if
Oh,
I
wow.
let me see if I can like email this picture because it is so far beyond. Like S&P mid cap is 19, Nasdaq is 17, equal weight S&P, which is RSP, that is 11, S&P 500 is 13. Like who
What?
is making this forecast? Have we
Wow.
ever have we ever seen small caps at 59 times? Like as far as like a standard Wall Street estimate, I feel like that's either the most outrageously aggressive that's like never going to be materialized, or I don't know. Usually they say when you shoot for the stars, you can at least land on the moon, or one way or the
Right,
other.
right.
Yeah,
Yeah.
whatever. Shoot for the moon, land
Shoot,
on the
moon,
stars.
limb of
I don't know,
stars.
whatever
Yeah.
it is.
Yeah.
But that seems a little outrageous to me to have. I mean, it's literally 5 times more than the S&P. And I think the S&P might be a little bit more resilient than the small caps. I get there's an outperformance that's been happening for a while, but I don't know, man. I think that's hard to believe with a lot of companies. I mean, to my knowledge, like 70% of small caps like still aren't making money right now. And they
Yep.
need a better borrowing runway, and they need more cash to like stay afloat and keep margins, but they're struggling. So rate cuts are like what they're needing, but if rate cuts don't produce lower yields, which they're
Yep.
not. Right now, yields have not improved since September 2024. We are sitting with stickier yields. They're not up, they're not down, but they have not really improved at all since we started cutting rates in September 2024. So I don't know, man. It just that's the big picture stuff that I'm like, I don't know how this gets really rosy and how this really gets super optimistic. And to be fair, it's like a bubble can surprise all of us. If you think this is a bubble, I feel like just wait. Just wait. You want to see a bubble? It's like S&P could be 10,000. NASDAQ could be up another 100% from here. It's like, yeah, I think we're talking bubble if that's the crazy stuff we deal with. But I don't know. I know we talked about this before, but give me your like 2026. Let's throw a scenario out here, okay? Let's say that S&P, um, two things. Do you think there's a probability that before the end of the year, do you think this market's going to have some type of like December massacre where we're down to like the 200-day moving average and doing some pretty heavy damage like end of the year only to like pick itself up in early 2026?
Yeah, I believe that it's not definitely not zero.
Right, that's for sure. Um, okay, I'll throw scenarios. One is if the market were to have a holiday massacre, like this week is Thanksgiving, from Thanksgiving to New Year's, there's really not a lot of drama in the markets. Usually, like what stays in motion or what's put in motion stays in motion. I think the problem we
Yep.
have right now is we don't have a direction. So
Right.
right now there isn't a motion. Like we have established bullishness, we peaked out here. We're bottoming on two candles, the October 10th and now the November 20th. That is a structure that you have to pay attention to. So if we were to test that candle from last week, Thursday, if it's a fake out, then I think we get back to these highs. If there's more of an orderly decline, we have the 200-day moving average. We have the previous all-time highs. We have some Fibonacci levels that all line up right there for some support. I would hate to see I'd hate to see a rough holiday finish to this year. I really would.
Yeah.
I think it'd be very, like psychologically, I think it'd be very damaging for the market to be down 8 to 10% from its highs going into the holidays. I think that'd be tough.
Especially consumer confidence lately. The numbers have not been pretty.
Oh my gosh.
And then if we get bad Black Friday data, oh God, it could get pretty ugly.
Great point. When will we get that data? Actually, we have retail sales that's due tomorrow. I think retail sales in the morning, but that's not really Black Friday stuff. That's going to be most likely October data. So that could be, taken with a grain of salt. But once we get into December, looking to see like what kind of holiday sales are we looking at? Also hiring through the month of November. If we have a December jobs number, are we going to get November's jobs? Or are we going to still get October's jobs? Or are we never going to release October's jobs? I have no idea.
And do we get the seasonal hiring data?
Exactly. So, yeah, man. Okay, so scenario one is we're down to the 200-day, or we're down to this previous all-time high right around the 38% fib, and all that fib is based on is the low from April to the recent high we had in the end of October. So if we're down to here, what's Kane going to do? Let's say we're trading at 6150. We're 6150 by the time you're staring at this chart, like New Year's Day or going into the first week of January. We're down to 6150. What's Kane going to do?
If we're there, then my portfolio is already in bear mode. But before then, like when we cross below that MA 200, my portfolio will be bear, and so I'll be positioned bearishly.
Okay, position bearishly. If we go from here, let's say we're down here and then back above the 200. Does that mean anything?
Yeah, that would be a positive. Well, I'd be looking for a fake out. So I would want to see a clear movement upwards. Yeah.
Okay.
Otherwise, it could be a false breakout.
Sure. And those are always tricky because let's say we're down here, right? A lot of times the markets, especially if it's what can be difficult is this type of very slow grind to the downside. Usually that type of move, if you patiently wait and you get some confirmation, one thing that's really key is like how it battles back and forth between here. Because one really strong reversal pattern that the markets like to do, especially in indexes and stocks, is a V bottom or cup and handle, where they sharply rally off a low and they aggressively rip through the structure. They take out this trend line, and then it might chop here for some type of like bull flag or a higher low. A higher low is like really critical here. Or just taking like, and I hate buying highs, but cup and handles, when you trade the neckline break, they're so easy to measure, and there's a lot of force behind those moves. But to be fair, if we slowly grind down here, okay, and then we have that big rip to the upside, just be on the lookout for that to get some teeth and take out the lows again, because that's where it's going to get the most painful. It's not necessarily this grind where people are already like pretty hedged. I'd say for the most part, people are hedged. The things are going to get uglier and nastier. That's what I was asking you, Kane, if we saw like one day is enough to kind of deleverage the market. Because if we're going to continue to slide lower but not do it really aggressively, it'd be this second leg that's going to cause the most pain. Because, I mean, the VIX is already above 20. And adding premium or adding puts right now, adding long puts, it can be a lot more expensive than when the VIX is at 15 or 16 and nobody's paying attention to it. So, okay. So that's scenario one is we're down here. You said you're already turning bearish by the time we're getting to that 200-day moving average. Okay, fair. Okay. Next scenario is this. Through the holidays, it's Thanksgiving. We get through Thanksgiving, Christmas time. It's like just fast forward 30 to 45 days and we're back up to the highs. What does that mean to you? Wait and see, cautiously bullish? Or are you just hanging out?
Neutral and wait and see if it breaks out. Yeah.
Okay. Do you think that there's actually some momentum to this? If we break out, do you see any type of divergence at these highs?
Well, again, that goes back to breadth. So if we're right back into all that same AI stuff, then you're just waiting to see what happens with rates and credit and all of that.
Okay. Is any one index in your mind better than the other? as far as like following your signals and your kind of bigger picture? You want to see S&P, Dow, Russell? You want to see like Dow and Russell do better, or just everything kind of across the board being positive?
Yeah, so I want to see more breadth. That means Dow catching up, right? Dow
Okay.
has been lagging, right?
Yep.
And then
Agree.
same with the IWM or Russell, right?
Yep.
That has been lagging as well. So
Okay.
definitely those are like the blue chip and the risk stuff. So
Gotcha.
both, so the middle of the road has been doing fine, but the edges we
Yep.
haven't been doing so hot. Mhm.
Yep. That's a great point. Great point. Okay. Chart alarm is set at the highs on the IWM. Chart alarm set at that Thursday low, and let's keep an eye on that. Um, okay. I need price today. Do you have anything going on for today? I've asked you this before. You don't trade a ton of zero DT, right?
No,
Okay. All right. Well, I do. I
I would
have,
like to, but I
yeah.
just
Well, I mean, we have a really good methodology when it comes to zero DT trading. So I need price. If it stays below 67.10, we have a full winner today in daily profit play. I have a defense trade in that is at the 20 handle, and anything above that, I have other defense trades in here. So I have some broken wing butterflies here above 20 and 25. I have a iron fly at 25. I have my daily profit play at 67.10. So if we're below 67.10, we'll have a full dollar winner today. And on my iron fly, I risk that for 50 cents. So I still walk away positive with some defense. But the nice part is and this is what I did. I did a two day masterclass last week on daily profit play. It's probably the most refined that I've ever been in trading like 3 years of zero DT. Look, man, zero DT is not easy, and it can be the most like it could be like the most rewarding to like win a zero DT trade because it's like, wow, I should just do this every day. But what I experienced with teaching this is traders aren't prepared for either number one, the market does nothing and all they're trying to do is be directional, or number
yeah.
two, a market like today, it's like we're actually above the expected market maker move for the day and it's threatening our call side, but yet here we are 7 points clear. And I think by the close today, I think we're still going to be fine and still get paid today.
I
So
think
if we
so.
don't,
Yeah.
we play defense. And so I just did this 2 day masterclass last week. And the reason, and this service has now been around for the last like 14 months or so, it's the most refined without trying to make it complicated. Essentially, I'll keep it really simple. If we have the core strategy is we expect the markets to stay within a certain range and we get paid like 90% of the time with that trade. And even through some of the craziness we've seen, we still got paid. Even Friday last week, we still got paid. And so what I added to this is I just added an element of very low risk defense trades
Mm.
because one thing that I think is to me, it's been like one of the biggest discoveries trading zero DT is just like take your VIX number and take your VIX. This is fancy stuff here, but you take the square root of 252 trading days, and that works out to be about 15.9. And so it's rounded to 16. It's called the VIX rule of 16. And so you take your VIX value divided by 16, and that should give you roughly the highest move that the market is capable of for the day. So it's not like you can sell at that level and get a bunch of premium for it, but it is a way to know that there's a logical defense level that the market shouldn't go above or below. So here's an example. Last week when the market sold off on Thursday, you can see the VIX was ripping up here. The VIX spiked up to 28.28. So take that value, 28.28 divided by 16. We're at 1.77%. Okay. Now I'll put this in perspective with the price action on Thursday because it's all here in this giant slide. Take the closing day price and I'm going to go 1.77%. And I want you to see here that from this close down 1.77%, look at where that low is at. Somebody read to me that number. 1.77%, and that is literally the bottom from Thursday.
Yep.
Right? So the bottom from Thursday was right here. Right there was the bottom, which means if you were selling premium here at 65.25 as a strike, you survived that trade. The close was 65.38. And my measured move was 65. You can use a strike of 65.25. There were, bull put spreads that would have been profitable at the end of the day. And you would have been able to probably grab a couple bucks on that spread because the VIX was blown up from 22 to 28. So anyway, That's one of the little tips and tricks we use for daily profit play. And so what I started to do was not only incorporate our core strategy, but have those defense levels also ready. So every morning when I go into my daily session, we are looking at our potential top and bottom based on the VIX value. And I also calculate based on gapping too. That's been one thing that has been difficult to adapt to is the market just doesn't open where it closed yesterday. Sometimes we have gaps. And like this morning, we opened up like, 0.5% higher. And so I take that gap into consideration and I take the gap plus the VIX. On the downside, if we gap up, I'm going to take the close from yesterday and then take my VIX value there. So I'm trying to give myself as much like space as possible to let the market do what the market needs to do and still come out a winner. That's hopefully the plan. So far today, like I said, if we're below 67.10, we'll have a nice winning day and, no damage. But ended up grabbing. So I did lose a little bit on Thursday. I did not make the adjustment like I wanted to, and I had only one of my defense trades worked, and the other one got hit. So unfortunately, I ended up losing $785 on Thursday, but Friday ended up making about I think 690 when it's all said and done, and I had a kind of a perfect trade on Friday. I didn't close it at perfection because it was the cash settlement, but I had a $900 profit trap right here at the end of the day, and it was Kane, it was within like 50 cents of my pin price. So
Nice.
that was ideal, but I closed it for like $590 and it maxed out at 900. So I took the 590 plus a couple broken wings and added up to net the day out for like $600. So basically in, one unfortunate, net loss on Thursday, I got most of it back on Friday. And then today we turn out another winner. Like we're just continuing right along with like mitigate the risk, keep grinding, keep trading the strategy, and we're right back in the black. So that could be literally today, and things are looking a little bit better now.
Yeah. And that goes to trusting your strategy and knowing that if you have defined results, and so you have an expectation, you can set an expectation, a mathematical, probabilistic expectation that your recovery is in so many days or so many trades.
Yeah. And realistically, it's like, the hardest thing to do in a 0-day environment is if you're like, I tend to do credit spreads, or broken wing butterflies where, there's a bit more risk than there is reward on those trades. And so the reality is I'm probably going to sacrifice about 6 to 7 trades. If I'm wrong, I'm sacrificing about 6 to 7 trades in order to recover from that. However, I'm not a one-trick pony. So when I do a credit spread that might take a bit more risk, I have a double up service that does mostly butterflies and ironflies, and those trades offer like 10 to 1, 15 to 1. If I land, one of those or partial of those profits, I can eat into that hole a little bit faster. And, again, it's just trading. I mean, I look back to see like, okay, I took a loss on Thursday. Let's see what happens on Friday. And, I was pretty fortunate, like a couple defense trades and some flies got me back to where I needed to be. And now I'm within like 1 day, 2 days of getting my full profit back after taking a loss. So the idea is build this out so we can bounce back faster. And traders that have been with me long enough to know, we do win a lot of our trades in daily profit play. We do make really consistent income in daily profit play. But it's also nice to know that when we lose, it's not going to take us, 10 trades to get it back. It's going to take us, maybe a couple, maybe three, 4. But there's ways to also get it back a little faster if, you're willing to take some small risk. So, all right, dude, let's talk crypto. I'm curious on your state of what's your state of the union for Bitcoin?
Well, it's interesting. It did bounce the last, so if you count yesterday and today, it is looking like it is bouncing, but I would definitely need confirmation because who knows? It could just be a dead cat. You could just bounce, recover up to that larger red drop right there and just go right back down, right? Because that would just be a pullback.
Yep.
So right now, I don't, if you're going to say very short term, like 1 or 2 days, if I was day trading Bitcoin, I might be okay going bullish, but otherwise I would be just waiting and seeing what happens.
I think unfortunately there's a lot of proof that Bitcoin has to show to like be back into the bullish scenario now. I think is this kind of the area you're talking about as far as like recovery? Like maybe this, are you even thinking shorter than that? But this is a nice little inefficiency.
Right. Yeah.
So that is 90, almost 97,000. And I mean, 100K, kind of a psychological level, I would guess. Here's one thing I'll look at price action wise. Let's say that Bitcoin, from this low makes a pretty nice move right to that level that I'm talking about. Okay. What I'd be watching for is, does it pull back?
Yep.
Do we have a higher low? Does it break this level? Because one thing that would help is if we make a higher low and we make a higher high, that higher high gets us on the right side of this trend line. And this higher high also starts breaking back above all these moving averages.
Yeah.
So, could it be that fast of recovery? Maybe. Um, did you see the poly markets and call sheet bets? They were paying like 3-1 odds and 4-1 odds on whether they're going to be at like 110, 120 by the end of the year.
I did not. How are
I
they?
mean, I'll never try that crap. It's just, we had a little Friendsgiving last night and a couple guys sitting on the couch and they're like, oh man, I'm in like, 5 fantasy leagues and this and this and this. And I'll just parlays and this. And my favorite question to ask anybody that sounds like they gamble a lot is, so how you doing this season? And almost every answer that I get is, about break even. And Steven Ground and Nate both, when I first came to Florida, that was like our running joke for the week that I was there, is they were just talking about all these little side bets. And this would have been, I think fall of last year. I would come down during like, college football season. Anyway, it's just funny. Like I know Morgan has some, DraftKings and whatnot, but it's just like that question cracks me up so much when it's like about break even, huh? With how many bets you place. And even if it's like a little $5 to $10 parlay, it's like, I don't think there's anybody out there that's making money on those apps.
Yeah.
So anyway, I thought it was interesting. Like everything has a prediction marker now. Yeah, if Bitcoin's back above like 100K or 110, it paid like 3-1. That's cool. But what I did do last week is I shaved a ton off my cost basis. I still have a small chunk of shares of MicroStrategy, and I was able to lower my cost by about $23.50 last week. And so one decision that I made is because of this decline, I am now going from like a percentage allocation of holding Bitcoin to now like it's just a trade. It's just a trade. You can get too much premium for it. I mean, I sold a 12-month covered call on IBIT and grabbed a 23% premium.
Wow.
And it's also out of the money. It's out of the money. So like the upside would be, I mean, I'd probably end up gaining like close to 40% of my position or 45% of my position because I just jumped like another, 22% lower. So that alone is like, okay, if Bitcoin can just stop struggling, then I'm going to lower my cost basis enough where it's like, I think the damage is mostly solved on my end. But like I said, I'm going to treat it more like a trade. I'm happy to have Bitcoin prove that it wants to go back up a little bit, and then I can kind of resume. I can always feel I could get back in. The one thing that I don't know if you've been reading up on this at all, but basically there's enough liquidity now in the crypto space. I mean, Bitcoin itself is 1.77 trillion. There's clearly like the securitization of Bitcoin with having like these treasury based companies and having IBIT, and so now you have people that are like billionaires that are cashing out, and they call this like the OG selling cycle. I listened to an interesting session. I think it was Jordy Visser from Weiss Capital Management, formerly known as Weiss Capital Management. He was talking about this is like Bitcoin's IPO moment where it's been maturing. So the original people that have been in it made a fortune on it. They're now trying to get out. There's enough liquidity to exit. I mean, are you kind of that school of thought? Are you long term? Do you like Bitcoin at all? Or are you just like, it's an unknown? What's your thoughts?
For a couple years, I think it's probably okay. Beyond that, it's unknown to me. But the people, like if you're a crypto billionaire and you made a bunch of money in Bitcoin and you want to sell now, where are you moving your money? Because every crypto guy, everyone who's like gung ho on crypto,
Yeah,
every single
they don't
one of
trust
them I've
anything.
seen, they're exactly
Yeah,
right.
yeah.
Exactly. So where are you going? Where's that money going? So if
Probably
that is the
the
case,
doomsday bunker, probably the gold bullions and silver bullions
there you
in a
go.
bunker with ammo and batteries and
Exactly.
MREs.
So if that theory is right, then I'd start looking at silver, gold, right?
Yeah.
And
Yeah.
they've been consolidating for a little bit,
Yep.
but they do look like they could break out soon. So
Um, I mean, somebody asked me last week, like, what's your thoughts on gold, and silver? And I just said, look, medium to long term, I'll buy every level in gold.
right,
If this thing pulled
yeah,
back 30, 40, 50%, I'm still buying more gold. I like it that much. I think that this to me is like an allocation to keep. I closed out a 3-year position this year on gold and silver. So
wow,
it's been a game of patience. I mean, I never thought that I would see this year, like I didn't expect gold to be like one of my best performing assets at all. but I'm glad that it was. It helped me generate some alpha considering Bitcoin has been sucking this whole year and actually is now in the negative. So I wanted to ask you. So we haven't hit the 200-day moving average in over 500 bars. The percentage away from it and the bar count is it's one of the most extreme I've ever seen. The only time it's been longer away from that, from the 200-day, is back in 2009 and 11 when we went over 600 bars and then we crashed about 30%. So I don't know if we have to have another correction. And again, this does like legitimately make me nervous because let's say that gold has a high, low, lower, high, lower, low.
Mhm.
What would be the catalyst for gold to drop, 15, 20% from here? The dollar, bonds, we have to have some type of liquidity event. Like what is going to be that, like what possible catalyst could we have to make gold go down? Other than I think the dollar getting way stronger when people have been expecting a bear market on the dollar.
Yeah, that's a good question. I was just thinking the same thing, and I haven't come up with an answer yet. What causes a gold sell-off?
Yeah.
I mean, suddenly people want assets again. So I would say there's got to be something, and it's got to be on both a consumer level and on a central bank level, where they're like, I want my capital free now, and I want to
Right.
spend it on something. So I
Right.
don't know what that something is just yet, but
Right.
right now there's nothing on the horizon that I can see that where people would want that.
How about a Trump stablecoin?
I don't think the people who are gold bugs are gonna
I don't
leave
think so
gold
either.
forever.
No, no,
So,
no. I don't think so either. Anyway, here's the bar count, dude. This goes back to October of 2023 and 542 bars.
oh, wow, that's crazy.
So it's a long time. And that type of like this move away. And if you can go back to like literally months of August, September, October, like all I kept talking about was I'm just going to start taking profits at some point. Like once we blew through the 4,000 handle, I don't feel bad about taking profit around like 41.50 when the high was 43.79. Gold, GLD, the highs were around 403. I think I was out at 376, between 376
Nice.
and 380.
Yeah.
On silver, SLV, I was long. I mean, I've had silver since COVID, and I've been riding this one for a while. So once we broke to all-time highs, that was my target. And so SLV, all-time highs. This was like a 1981 high and I think 2011 high. It was $44. So we hit 44, and the next day I just started trailing. I got knocked out at like 44.50. And I don't feel bad about that at all. So the highs were, 49. I left a tiny bit of money on the table, but I'm going to get back in. Like if we pull back and just chop around here, I'll buy some support. I'll call this level 1. If we come back to this area, I don't know if so we come back to that same low, like I'll say that's level 1. You can look at
Mhm.
these cluster moving averages. That to me is level 2. And we come back at all to this, past resistance area or past support resistance area. I'd say that's level 3. So whatever I want to allocate, if I'm going to say, I'm going to put 10K in my portfolio in gold. Okay, we'll do like 3,000 here, 3,000 here, and 4,000 here. And there's my 10K allocation. If this goes to all-time highs again, cool. That's an investment for me. Whatever that percentage is, like that's how I'm treating it right now. And then once I'm more confident on direction, then I will trade more silver futures and I'll start putting in some option trades. I'll trade more SLV. But anyway, that's where I'm at. It was a nice 2 to 3 year run. Took a lot of profit. But yeah, back to that gold situation. Is like I don't know if we really have a catalyst to bring gold down, but everyone that wants to get long gold, I feel like it is going to struggle to go much higher without having this. So
Yeah.
I think if we're lucky, all this does is consolidate, 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 and it just builds up here. If we have like a little bit of a retest, I'm just all I'm saying is watch the 200-day moving average. I feel a lot more comfortable once that is tested. Once that is hit, once that is poked, then my historical lesson is we found it, we tested it. The market is now like efficient again. So that's the reversion that I've been looking for. Now I'm looking to kind of reestablish that core position and staying pretty bullish.
Yeah. So long chop sideways
Yep.
is before moving up higher. So I was going to comment that what I like right now is a broken wing butterfly on the metals gold or silver. So
Okay.
with no risk to the upside, right?
Okay.
But you're capturing that sideways chop at the moment. So between say like looks like maybe 3,800 to 4,200-ish.
3,700. I mean, so give me a trade. You going GLD? You trading? What are you trading here? Gold
Yeah, let's do
futures?
GLD.
Okay,
Yeah.
let's do GLD. Let's talk
Might as
about it. All right. Okay.
All right. So we got that. Let me see
You want to
what
grab the
that
screen and walk through it?
Sure.
Okay.
We can do that.
Go for it.
Grab my, come on. Okay. There we go. All right. Okay, so we've got this chop going on. We have a local low right here. Okay. And we have a little bit of a high, local high right there. So that's the chop region that I'm looking for. And I'm going to go, so GLD offers 3 times a week expirations. So I can do this weekly, I can do it bi-weekly, I can do it monthly, just depends on how long I think this chop is going to last. For me, it's always a little bit safer to go shorter term, just do 1 or 2 weeks at a time.
Okay.
And then put on a new one when later on. So we just have to see if reward risk justifies it. So basically what we're looking for is something that looks like a broken wing butterfly that would have risk kind of like this. And so it would look kind of like this.
Okay.
So you have a minimum amount that you could gain right here.
Yep.
You have a lot that you could gain as long as it stays between certain levels.
Yeah.
And then you might lose and then cap out your loss over here.
Okay.
So we could say that this range would be about 360 to 388.
Okay. I'm going to build this out while you're, I was going to say, throw an option strat. Let's build this bad boy out.
Yeah. So I like to do I don't like to do combinations of calls and puts. So I'll just do calls just because we want that unlimited upside. Is generally you're going to get a little bit more favorable pricing on the call. So let's try, that would be 1-2 weeks out. And we said, what was it? 360, 388 with the centered right where we are right now.
Okay.
So let's GLD 360. Do you mind closing that door? Okay. So if I pull this in right here, what you see is that by expiration, this is the first strike where this comes pretty close. Here I have a very little risk to the upside, but this is the first strike where even if no matter how high it goes, I'm going to make at least a little bit. Right? So if I take a look at this one, I just want to see what this break-even point is right here. That's 375, and we were looking more for like a 368. So this is going to be difficult because no matter how hard I stretch this, we're pretty limited. It's still going to be that break even at 372. So if I really want to capture that 368 down here, so 372 is basically the recent week or 2 weeks chop. But if I want to capture this over here, I've got to start lowering my center point. So we might do something like that. I've got 368, and we want it all the way down at 360, which seems a little impractical, but let's try it. Sorry, I should have done it over here. Something a little closer so we don't have as much risk. Yeah, so let's try 365. Okay. So here, what we're seeing is that this range where we can make more money is pretty tight.
Yeah.
It's at 362 all the way up to only wherever I put that strike at, 367. So we need to widen these out if I want a wider range. So this doesn't look like we're going to get paid on a practical level. So we could try December 19th, see if that makes a difference, go out more time. And break even's about the same. And yeah, it doesn't look like that might be better. 360.
What and you said what's your break even price? 360 what?
0.85 at the moment
Oh, okay.
for
I'm,
this
I'm building
spread.
one out. I've got like a 362 break even. Well, I just want
Okay.
to compare. Like build this out, and then I'll kind of compare. I'm going out. I'm looking at one like the end of the year. I'll just go December 31st. Kind of pricing this out. I'm looking at it's decent.
Okay.
Let's
Let's see.
compare.
And where our current level is at 378, 380.
Hmm.
We'd want, I'd want something pretty wide then. This be pretty capital intensive.
Yeah. What's that tail credit to the right side? So if price goes up, you get about $100. Okay.
100 bucks,
Um,
yeah. On
so
a
here I'll
thousand.
just you can keep this one. Go to the 31st. Try the December 31st.
Okay, let me.
And let's do the pin price will be 370, and we have a 375 call and a 350.
Okay,
So it's
so
definitely wider, but
similar.
I'm trying to.
Yeah,
That's why I was like, "What's your break even?" Because a 362.83 be that break even, but we get about $200 on the tail side, and we get
there
that
you go.
profit trap, which I kind of like the idea. When you go to the chart, 370 looks like kind of the nothing zone. Like if gold's not going to move a lot, 370 is like a pretty good chop zone, and I think price can kind of stay above that. So I mean, 370, we found some intermediate lows there already. And if it leaks a little bit lower, that's still I'm still able to get some of that profit trap all the way down to like 362, 363 before I take in any risk.
Yeah,
Um, so I mean, I kind of like that trade where obviously something would be going poorly if we're going to take on risk below 361 versus upside I get about $200. Profit trap I get upwards of $1,200. That's not a bad structured trade, if you ask me.
yeah, that looks pretty good.
And that's just kind of assuming that the market's going to be relatively stable through the end of the year. And
Yeah,
I think gold has been proven to be pretty stable. I think a lot of people had their fun, had their excitement, and now it's just another sideways chop fest or maybe some accumulation. Central banks have been one of the biggest bidders of gold this entire year. The retail crowd's what jumped on and kind of pumped that thing up above 4,000. So yeah, I think that's a good looking trade, man. I mean, it is a little capital intensive. I mean, my max loss, if I'm dead wrong, is 1,200, so I don't love that. But
yeah.
maybe I can tighten that risk up a little bit. 355. Now I can still make about $155 on the upside. I still get a profit trap of about $845. Well, 655 is max profit, but I don't know. I'm gonna play with this. I think it's a good structure. Maybe I'll mess around with my if I go like 360, give myself a lot of wiggle room here. I'll go 360 by 65 to 40, maybe. Yeah, now it's just a lot more money to like
Yeah,
put up
yeah,
put up on that
yeah,
trade.
yeah,
Yeah, that's the trade-off. Is I mean, if I was going to make like $200 to $300 and still risk less than 1,000, I think that's a good looking trade. But I'm going to kind of play around with the numbers. But yeah, I think
yeah,
that December 19th or that December 31st could be some good expirations to play with. And this is one of my favorite things about just talking shop with you and just building options. And I know this, in case everyone doesn't know this, we will be, Kane and I will be joining Nate regularly on it's either going to be opening or closing playbook, but we're going to start a new segment called Build a Trade where stuff like this is going to take place. Is you tell us what asset you want to look at, we kind of kick it around and we figure out what type of trade we'd look at and like at, or what type of trade we'd look at and like. And if we take it, then you can follow along. So this is kind of the same right up the alley of exactly that. But like I said, I'm gonna kind of play around with the numbers here and see if I can find something that I like as far as if I can risk less than maybe $500. Or I don't know. I think the profit trap would be great, but I think if I'm going to profit trap it, I want to see something around. I mean, 360 is like a pretty good level if we're going to come down to support. I think it's hard to profit trap it, to the upside. Um, but part of me is like, all I've been doing, Kane is just selling puts way below the 200-day moving average. That's all I've been
yeah.
doing. So all my trades right now, I'm trying to think a couple of trades that I have in right now on GLD. GLD, I have. Let me find out here.
Well, real fast.
Yeah.
How do you like the one that's on the screen right now? So up here, 37.50, so roughly
The
40
risk is way
bucks.
better than mine. I like that a
Yeah.
lot. Yeah.
And on 262. So that's still about 12-13% right
Yep.
here.
Yep.
And then your net debit's only at 250, and then you've got your profit, your break even still right about that same 362, a little bit lower actually, 58. I kind of like this one.
Okay. Let me see. I'm going to take a screenshot of that real quick while you got it up. So that's the 31st, 367, and you're going up 4 and down 7. Yeah. Yeah, I mean, that max loss of 262, it's like I go 2 contracts in that one, pull, what would I pull in on if price just goes up, what do I pull in? Like 70, 80 bucks?
Right now.
If price just goes up, like if we just see price go up and it stays up, like I'm still going to pull in
Oh,
about
gotcha.
80 bucks, right?
You're pulling in about 40 bucks.
Okay. So if I did 2 contracts, 80 bucks out of, 520.
You're right.
Okay.
Yeah. We're just
Man,
not.
it's just like a daily profit play trade. 80 out of 520. It's about 50. Yeah, 50. Just like you said, 15%.
Yeah.
I mean, totally good trade. I like that a lot.
I'll save that. And
okay, I was going to look at what do I have going on right now? I've taken a lot of ratio spreads off for profit. Let me see if I have anything running right now on GLD. Ratio spread 265 by 260. Ratio spread 285 by 280. And ratio combo 360 by 340. That's a 20 wide where I have these profit traps, and then a 335 by 320. I pulled in $9.04 in that one. I mean, I just need time in these trades. So that's what I've been doing, because it's like, well, if I have to put a trade on gold because I want some allocation, I certainly don't like buying it now. After being in it for 3 years and kind of patiently waiting for some profits to just blow up, and they did in a good way. So now it's like, okay, well, I'm back to cash. I get a nice injection of profit on gold and silver, rather than just putting that entire amount back in the market. Let's take some nibbles. Let's kind of put some tactical levels in that we'd like to maybe consider establishing some ownership again, and that's exactly that. So the 340 strike, the 320 strike. Can you go back to the GLD chart since you have it up?
Yeah.
Okay, so 340 strike would be below that recent low, and 320 strike. A lot of these are going to coincide with your moving averages, I'm pretty sure. So there's a 360, there's a 340, there's a 280, and a 260. So all those are potential ownership levels.
280, and then what was the last one?
260.
260.
Yep. So 340, 320, 280, 260.
Okay.
Yeah. So those are out there. And, the most, to me, I'm going to say the most aggressive, it's like near the 200-day moving average. That's where I would start a little bit of ownership. And then because we've got some gaps, and that was kind of the last runaway move, it's like, well, I mean, would I own gold at a 50% discount? Yeah, gladly. So I don't know. That's kind of the fun part, is I don't mind going out, to middle of next year. I don't mind going out to the end of 2026. It's like, I think that gold, although it might do a lot of nothing, I mean, that's one thing that I always think about, is the market does something amazing in 2025, like gold's up 50%. I just don't ever assume that the market's going to do that again.
Right.
So I just look at it from the technical standpoint of like, okay, well, where could it pull back to? I find all those moving averages. I would welcome a pullback. I'd be a much happier trader buying things at a discount versus assuming that it just has to go up and go up forever. So, gold is not one of the assets that is built like the S&P, where the S&P can climb the wall of worry and do things where it's all about going up because the strongest company is a healthy economy. It's like, it's designed to go higher. Gold is not that asset. Like, I do wonder how many like gold purists this year were really surprised by how well gold did. I didn't follow a single thing that Peter shifted, because I know what he does. He just peddles gold all the time. But I'm curious, like, is this now like is this reinforcing their narrative of gold as the greatest asset ever? Or are they about to face like another 1 to 5 to 10 years of absolutely nothing in gold, because it really isn't just this all-purpose asset, other than, yes, it has its times, it has its moments, but you can't just assume that it's going to go higher. It's not designed that way. Gold going higher means that some other stuff is going on. Like, gold going higher means we have probably fiat problems, we have debt problems, we have bubble problems, we have something where it's like, it's just seen as like this store value in this hedge that the market is, always had some value assigned to. I don't know what it looks like in the future if we, get back to some type of gold standard. I don't know if we, fix our fiat, inevitable debt problem. I have no idea. But allocation wise, like I'm happy to put probably 10 to 20% of my portfolio in gold and silver as long as I have a core position trading options around it. And honestly, like gold purists also argue with me on that because they're like, just buy gold bullion, buy the gold, buy the bars. I'm like, yeah, I get it, man, but I don't want to have a safe and be like, trying to doomsday prep my house with like, what do I do with all my gold? It's like, I don't have a practical use for that outside of then having to go find somebody that's going to take it from me or buy it from me at a
Right.
markup. And, if I can trade it conveniently in an electronic platform with my stocks and options portfolio, that's a starting point. Yes, I do have some gold bars and silver bars, but nothing that I'm just like, I'm all set. Like if it's, I don't know, man. I mean, I've got this is my best friend talking, dude. My best friend is literally like, he scares me with how like Bitcoin blue and orange pilled he is. And he's very much like now he's been all about gold. And I just swear, like it's almost like he wants to have like the end of times materialize while he's
Right.
here.
Yeah.
It's like I just don't like that's not the life that I want to live. That's not the world I want to live in. And I get it, like maybe that's what we have to make adaptations to, but I'd like to think that we're not going to have to deal with that. And if we do, it's like, okay, be
Yeah.
ready for it. But it's like, that's not what I'm planning for. That's not what I'm,
Yeah.
it's just crazy how like there's like there's the extremes and then there's probably the reality somewhere in the
Yeah.
middle, and it's, I never let myself kind of get on the extremes. I'm pretty much like, what seems rational here, something's going to make some sense at some point.
It's like the opposite of being a good risk or portfolio manager. It's like you're putting all the emphasis and your focus on that tail risk, on that risk that's so far away. It's sort of like saying, in my portfolio, I'm going to just put on a bunch of black swan hedges, and that's the
Yes.
bulk of my portfolio. It's like,
Yep.
wait a second here.
Yeah. And like I mean, Michael Burry called 50 of the last two crashes.
That's right.
I
Yeah.
mean, look, you
Yep.
you can be right on that black swan event, and black swans can pay really really well. But I mean, good luck because we also have learned. I mean, we have an entire financial institution that's global that has learned from crises. It's
Yep.
learned from the great financial crisis. It's learned from the dot-com bubble. It's learned from liquidity events. And there are tools and resources and programs in place that there's a reason we've avoided a hard, like full-on recession for the last decade plus because it's almost like we allow like certain sectors to feel it, but it's not all in. It's not like the the
Not all
the,
at the
the
same
everything
time. Yeah.
bubble. It's not all the same time. Like so people's definition of recession is like everything's going to suck and everything's going to go down. But we had a rolling recession during COVID. We had a rolling
Yeah.
recession in 2022. And you could say right now that it's a Wall Street versus Main Street recession. Like we are feeling the pinches of higher inflation, lack of purchasing power, life is more expensive, everything in life is more expensive. It's like that does hurt a lot of people. And it's not everything is down. And the most unfortunate thing is like the stock market as a scorecard, everyone's just like, well, heck, we're only 4% away from all-time highs. What's the problem? But under the surface, it's like people are, indebted up their eyeballs and defaulting on things, and there's consumer concerns. And if all these, I mean, Elon Musk just said he can see in the next like 20, 30, 40 years that nobody has to work and we'll have all the money in the world. And it's like, that's cool, but what purpose do you have as a human?
Right. Yeah.
Other than like, I guess we can enjoy it and have like robots do everything for us. But it's like, yeah, I mean, it'd be nice if everyone's like house was paid for, but it's like, I just think that there's so much greed in this world that it's like, who's going to end up with the most? It's like
Yeah.
I mean, like this right now with like the Mag 7 being so concentrated, part of me thinks that the Mag 7 is ultimately going to be like, who's going to be the number one? And the number one is going to take like everybody else's lunch. And I just think that that's the constant game of like corporate greed and capitalism. And maybe that's a good thing. Maybe that's the simple-minded nature of like, just if flows keep coming into it and it's this like feedback loop of more forced buy-ins and 401ks and pension plans and participation, just go with the flow. And there's inflows coming in every month. So until those inflows change, until that liquidity changes, that structure changes, I mean, honestly, like there's nothing to fight. And I think that's what, when we keep coming back to these conversations, like I always like Kane's approach when he's just it's got to be price. Like price below this, I'm already bearish. Price above this, cautious, but that looks a little bit better. And so I think right now price is in a proving ground. Like I want to see price, get above a certain level, or we've got levels of where we want to get in and participate and allocate more capital, or we want to stay out. So anyway,
Yep. We got a couple good questions here. Mike
yeah,
was
let's ask.
asking, Venezuela war, war, specifically Venezuela, does that help gold?
I mean, you can take this one if you want. I mean, are we going to go to war? Are we going to war? Are we helping them with war? Like, I don't know if I don't think a South American conflict would be a war compared to like China. I think China Taiwan might be a much bigger conflict or war globally than Central or South America, in my
Yeah,
opinion.
I completely agree. Yeah.
So not to put it like off the radar, off the map, but it's like I mean, if we have barely flinched since the Russia-Ukraine war for the last 3+ years,
Yeah.
I don't think that South America, Central America conflict will do much compared to like U.S. China. If you take the immovable object, the unstoppable force powers number 1 and 2 in the world, and they are no longer frenemies, but now they are strict adversaries. I think that's where the whole world is on notice. I think that's a tough situation to navigate. But yeah, anything else is probably something the market can climb through and ignore for a while.
Yeah. And
What
then
else
we
here?
got
What other
one,
questions?
Brandon was commenting, I think, when you're going through like, oh, well, all of these conditions inside the markets, these are what you would look for people to really just flee into an asset like gold. He's saying that we have those problems and worse than ever, and a debt to GDP higher than ever. So when isn't that our argument for gold going higher?
I mean, I'm not saying that gold can't go higher. I think that it probably will. But what I am saying is the whole world is in debt. The whole global economy is in
Yeah.
debt. It is a ticking time bomb that might have the most creative accounting mechanisms to never let it default or never let it be a problem. We're all drinking the same Kool-Aid. And if the US goes down because of a debt problem, we're dragging the whole world with us. If China goes down because of a debt problem, it's dragging down the whole world. It's like we're so interconnected. I mean, if you didn't get a sniff of that from April this year, that was truly systemic to me, was watching how price action behaved during the Liberation Day week. Like everything was down and violently down. And that goes back to the saying, it's like the US gets a cold, the world catches the flu. And I think there's obviously, the US is number 1 for all these years, and we are going to fight. We will fight to preserve number 1 in the world. But granted, we don't make stuff anymore. We need stuff. We buy stuff. We don't have rare earth minerals. All these things. It's like China is more efficient. They have absolute authority. They do exactly what they want to do, and they'll stay to that plan until they see it through. And that's one thing that scares me about China in the long run, is like they can do whatever they want, and they are patient and strategic on how long they can do something. And honestly, if they wanted to like cause pain in the US markets because we are so financialized and gamified in our markets, all the US would have to see is like, oh my gosh, the market's down 20-30%. China was down. I mean, dude, Baidu and Alibaba was down like 60, 70, 80%. They don't care. It's like, so they can backstop it if they want to, but they don't care because they're consistently telling their consumers and investors, it's like they're trying to deflate their reliance on real estate. They're trying to get as much like money out of real estate so it's more controllable. So it's not just everything is hinging on like, these property markets. But anyway, to that point, it's like, what's Japan's debt to GDP? 220%.
Yeah.
And I know Ray Dalio talks about the 120. The 120 debt to GDP has always been a fall of empires. But if Japan can run at 220, does that mean the U.S. has 100% more debt to GDP to run with? I have no idea. So either way, like the U.S. is never going to go down fighting without a fight. I would promise that. So, and again, like if this conversation feels like it's going negative, it's like it's not. It's just this is the wild stuff that there's the far extreme of that, and then there's the far extreme of whatever else. And somewhere it's like when it's all said and done, you look back 5 or 10 years, what's this market? What did it really do? I couldn't tell you, but I would say it's probably going to be something we can all navigate. Kane, if the market were to drop down 50% in the next 12 to 24 months, would you still be a trader? Would you still survive?
Yeah. Absolutely. Yeah.
So would I.
Yeah.
That's the whole point I mean, it's not fun. Like nobody's going to enjoy a 50% pullback in the markets, But if you could see yourself surviving that, maybe even making a few bucks or not losing money in that, you're going to be fine. And we clearly would have bigger problems. Like something major is going on if the market's going to let that happen. And I don't know what it is. Like we literally, I mean, I can't tell you how many catalysts I thought of this year that's like maybe this, maybe this, maybe this, maybe this could like disrupt the markets. Nope. 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 Like nothing
Yeah.
disrupted the market. You know, I
Yeah,
mean, our two
market
biggest
did not
sell-offs,
care.
our two biggest sell-offs this year were on a tweet and a post NVIDIA fake out. Those are our two biggest earnings, or our two biggest fake outs this year. Where,
Yep.
or I should say, like the single day sell-offs were violent, and it was a tweet which was one, and then a NVIDIA fake out,
Another one.
which was
Yeah.
just a wild and crazy open to close. So, all right, what are you showing there?
I'm just showing the two tweets this year and NVIDIA.
Oh yeah. So those two vertical lines, right? You've got the October 10th candle and the November 20th candle, and you go back to Liberation Day when it's like that was literally like he said what he was going to do, and he did what he said he was going to do, and the market was like, oh, I guess he was gonna raise tariffs around the world. It's like I don't know why it was a surprise, but it also showed like how reflexive that rally was because immediately when it happened, within what, a week of that bottom, it was like an April 7th was like the breaking point, and then the 9th was like the crazy surge to the upside.
Yep.
Funny how you remember those dates when they're like,
Yep.
oh yeah, I traded through that. I remember that day. Yeah, crazy. And that was a Monday to Wednesday. That literally like that Wednesday was the only reason I went to Augusta this year, because it's one of my like biggest perks from like coming from the golf business back in the day was I've kept my PGA card, and I have family that lives in North Augusta. I go to the Masters every year. And dude, that day, like honestly, I was like, I'm not going to go to Augusta. This market's been freaking crazy. I'm just, I'm playing defense. I've got some hedges. I got to just, and then all of a sudden Wednesday happened. I was like, I'm fine. Everything's fine. Like, so I just started loading up on premiums, and when the market was, scary, it was scary. I was selling premiums in March. I was selling premiums in April. But once that day kicked in, I was like, okay, I mean, now everything stabilized. We saw a cup and handle pattern, and I was long up until the all-time highs again. I've let a lot of profit like slip because I didn't hold it through like August, September. But it was still a hell of a trade. So now I'm just like, does the market stabilize here to the end of the year? Do we limp into the end of the year? I don't know. I'm hoping it's stable. I don't think anybody wants to see like a holiday, a rough patch for holiday trading. But it's also to be fair, it's like, Kane, do you see this as like a very vulnerable window for the markets because there's like way less volume in liquidity during holiday times?
Yeah. So, I mean, yeah, now to the end of the year is generally less volume in the market. So
Correct.
things can get pushed around a little bit more, or
Yep.
you'll see like institutional, like their movements, they slow down except to prepare for year end and tax preparations and all that. And so you see a lot more retail show up, or because you're still trading, or you're still whatever, they're still in the markets. So you'll see this chop a lot. So if we look at, for example, last year from November till now to end of the year,
Yep.
so that was right there to the end of the year, right?
Yep.
So that last year, it's looking like we might have a repeat of last year, where yeah, it just sort of went up, but it really was just a lot of chop.
Correct.
And what's really getting me right here is also the behavior of these faster moving averages, the EMA 8, EMA 20, EMA 50.
Right.
If you look at that, we haven't had this the entire year in 2025 where we saw these cross each other and touch each other.
Right.
And so that is what gives me pause. It's like, okay, well, once we do something, generally, you're at the very least, you're consolidating for a while.
Yep. Good point.
And then either it goes down or it goes up, but it's looking like chop to me, at least into the end of the year.
Yeah, no, that's a super good point. And also that chop, I've been asking myself, like from the April lows to now, is that chop going to be a distribution cycle that ends up breaking lower, or is it an accumulation cycle that does justify like, yeah, earnings are fine, we're stable, we're resilient, blah blah blah, like maybe. But again, we go back to kind of bring this thing full circle. It's like, let price kind of prove it. I think Kane's totally onto something with like, we've seen a lot of chop, and it all started like with that October 10th candle. That started to bring things tighter and closer. Then we got some crossovers. We tested the 50-day
Yep.
period for the first time in a long time. That was one of the longest bar counts in history, from going
Yeah.
above the 50-day moving average ever. And we finally hit it. And I just think that was enough to give the market pause. And yeah, I mean, it wouldn't surprise me if the market is above the October 10th and above the November 20th lows. I think it'll stay above that, but have a very difficult time going significantly higher. So
Yeah.
I think if we
And,
just if we hang towards the highs, great. But I just think maybe this is about as good as it gets right now.
yeah. And just to remind everyone, we started out this year terrible. It
Yeah.
was being called the worst start in the last, at least over a decade, I think it was, right? Where this
Yep.
was down almost 10% going in down into
Just that rotation
April.
alone, that
Yeah.
February Mag 7
Yeah.
rotation was enough to be like, this is one of the worst starts we've
This right here.
had. Yep, exactly.
Yeah.
Yep.
And then that's sort of what we're looking at right now. At least if we keep chopping this way, that's sort of what we're looking at. I threw something in my Telegram, Chris, this morning.
Okay.
The motions of the, and then I superimposed this SPY chart on it. And I said, okay,
Look
well,
at you.
so I asked my group. I was like, well, I put this matching up with Euphoria. Do you think this is accurate, or do you think that we are still in this belief or thrill area?
Right.
I got 37 for Euphoria, 7 for belief, and 4 for thrill.
Wow. So a
So
lot of
I
euphoria
mean,
thought, huh?
yeah,
Okay.
but it does. I mean, to me, it does. I mean, there is a danger that this is Euphoria.
I agree. I think we mentioned this last week. I thought, what of this market, having like a 100th anniversary of the Great Depression? If
Right.
if it's willing to wait that long and actually have, like, 2029, 100 years later, the market has another giant collapse.
Yeah.
Maybe, but nobody knows. So, I think 2026, if it was a trader's year, that'd be fine by me. It's like if the market basically returns anywhere between not -5 and +5 as an
Yeah.
index, it's like there's
Yeah.
plenty of ways to make money in that environment. There's plenty of ways to improve your portfolio. There's plenty of ways to lower your cost basis on things. Um, but I am a little exhausted of, like, this market's ability to go up 15, 20+% just in an index every single year. It's like, yeah,
Yeah.
I get it, man, but it's been so good for so long, and we have avoided a lot of, like, realities that but again, it's like the stock market isn't the economy. And it never has been. And if you saw
Right.
that in COVID, you saw the disconnect, and you saw it in 2022, and you saw the disconnect. You see it now in the disconnect. I mean, people think like, oh, my 401k is near all-time highs. Right. But are you making less money at your job? Are you still have a job? It's like, it's not that bad right now, but people are worried, man. Like, I can tell from just, like, talking with family and people that reach out to me. It's like, should I get gold? What about this? And should I, like, go to cat? It's like people are asking questions about what to do. And one thing that's really discouraging is, this is a couple of financial advisor buddies of mine that were talking about their same clients over the last couple of years. That household brings in about 150K. That same household is now bringing in like 225 to 250K and not having anything else to show for it. Like,
Oof.
their expenses have gone up that much, where it's like they're making like the same amount of money as far as like net returns or just margin. Like a household margin is as tight as it's ever been, and they're making like 50 to $100,000 more per year as a household. That's what is insane to me, is like how much more expensive life has become, and how much more unaffordable things have become for a lot of people. That's never good. And so I did think for this market to really turn over, like, either the stock market pushes this into recession, because I feel like Main Street's already feeling it, or sentiment is so bad and Main Street is so angry that maybe it's just an aggressive change in policy, where it's like, you know what, Trump had 2 years, it's not great, we're going to vote the other way, and it's a Democrat sweep, and I don't know if this is good or bad. Again, there's a happy medium that I think would be better to have, like a compromise and a middle ground, but we don't have that. We don't vote middle ground. We don't vote common sense. We don't vote the party that's not represented. It's like you're left or you're right, unfortunately. So if there's a market that's choppy all in 2026 and policy switches aggressively, then yeah, I think 2027 could be like a very rocky year. 2028 would be the end of Trump's term. 2029 is the new administration. So if the market's able to hang in there that long, it's like, this is why I'm not saying this is a bubble. I think there could be a rotation. I think that you could see healthcare do well next year. I think that you could see, AI is still happening in the background. Other companies, look, small cap companies could benefit from AI. Unfortunately, they're gonna fire people to do it, but their margins could be better. You know, I guess I'll keep an eye on the 59 EPS that's calculated for small caps. I just think that's crazy,
That's
dude.
still crazy.
Yeah, right. So, all right. Anything else for a wrap up today? I really like that butterfly on GLD. I'm gonna play around with those. I've got the screenshot, so I'm either gonna take that trade or play around with those levels. I might play around with the expirations as well. I might look
Yeah.
into end of the year, maybe that December expiration. This week trading. I'm trying to think. Friday markets are open but limited time. I think the markets close at 1. No trading on Thursday with the holidays. As Kane mentioned, volume is a little bit lighter during holiday times. We tend to see the market stay in drift. But unfortunately, we're right now like sitting at such an indecision point technically that there might not be a lot of anything. It's just ups and downs. So, I will see this stuff every single day, daily profit play. We will figure out our levels. And honestly, my favorite question to ask every morning is, will the market makers do the job? That's what I ask. And if they do their job, we should see things stay relatively contained, and we could pull in some profits every single day. If something is outlier-ish and it's above the expected move, then we have defensive strategies to help us hopefully win the day, or at least mitigate a lot of that risk. Kane, what do you got going on this week, man?
I'm quiet, right? So I'm expecting everything to be pretty quiet. Swing trades, I'd be super careful.
Okay.
Take profits more quickly.
Okay.
And then really, if you're going to do any trading this week, my personal preference is do the zero DT stuff, because swing trading, you're probably just going to get chopped up.
Yeah, I don't disagree. Dude, surprisingly, I've had like a really good day today.
Nice.
Yeah, I mean it's been. I mean
That's
I'm
it.
up. Yeah, I'm pretty green for the day. That's a heck of a comeback considering. I mean the market's up a little bit, but for
Yeah.
my 1.5, I think it's just because as the market, I'm looking at the VIX right now. I mean, dude, when the VIX was 24 to 25 last week, and it was 25 to, I mean, literally intraday. The VIX was from 20.5 intraday all the way up to 28.
Yeah.
Like I said, I just sold some premium, and when I was shocked that I could go out and go that low in price and get that type of premium. Let me find my Project Options Edge. So I did a trade on Google today for Project Options Edge. I did a trade on Costco. I did a trade on QQQ and a trade on SPY. Between those four, let me look at the income. So 250, 243. Costco was a 465. That was a pretty sweet move. And I have a $40 profit trap on Costco with a ratio spread. So I did a 500 by 460 ratio spread, Kane. So it's a $40 profit trap. I put here, if Costco is by expiration, if Costco is 460, price would be a 61% discount from all-time highs. I would own some Costco.
Okay. All right. Yeah.
And I also warned, like, because the company is over $900, I wouldn't be surprised if we have a split coming in 2027 or 2026. I just hit a profit target, I think, on Pinch Point. Let me check. Pinch Point just hit a profit target right now. Let me confirm that here. Pinch Point VEEV. Oops, don't do that. Crap. Messing up my spreadsheet. VEEV. Yep, 480 debit just closed out for 650 credit. Beautiful. That's my favorite thing about Pinch Point, is just automatically closing out my profits. 650. So what is that? 170. 170 over 480. 35.4%. Don't mind if I do. 170 over 480. 35.4% winner. That puts us up to 85.4% winners. Love it when they close out automatically. I'm going to update that in my Telegram.
Nice.
Back to the trade. So Costco got a big profit trap. So 250 and 243 and 465. Google this morning for $1.65. Oops, plus 165. So that's $1,100 in premium just by, and every one of these trades is Google's a 96% chance of profit. Costco's a 98% chance of profit. The SPY, I can look at it and see what it was like a 99.5% chance of profit. Again, there's no guarantees on those trades, but that's a pretty safe $1,100 that I just generated by selling some premium when the VIX is at 20 plus.
Yeah.
So
Yeah,
anyway,
so
and
that was a
that's
great,
kind of what I do.
premium selling environment. Yeah.
Yeah,
That's
I
great.
thought I mean, and plus I was like, okay, are we that close from watching the VIX go from 20 plus to like, are we going to have like a VIX event? Is this going to be like a 40 to 50 spike? But it wasn't. It's like we went to 28. We've come down. We're back to 20 right now. I mean, we've dropped on the VIX from the highs last week. The VIX is down 27%. Like now, I want to see like if we actually break below 20 on the VIX and get back into the teens. It's like there's your nice little holiday recovery. I think.
Right. Yeah.
It gives the market a chance to breathe a little bit and just kind of realize like, okay, we're not falling apart right now at the seams. So cool, dude. All right, let me get this updated for Pinch Point. That was a nice little winner. And any final thoughts? Close this out today.
Yeah. Well, like I said earlier, just be careful this week. Don't get your emotions up. Things are less liquid and more likely to jump around and chop. We are in a high volatility environment on top of that. So things can swing up or down, left and right. Just be very careful. Don't take tighter targets. So take your profits earlier, but don't do the same thing for your stops because you could just get swung right around.
Yep.
So other than that, zero DTE is still great.
Cool. Yeah. And if anyone wants to join me for Zero DT, my daily profit play sessions are free for everybody. So you're not going to get the alerts from me because that's for my members. But if you want to come and actually get the day-to-day process, everyone is welcome to join me. I'm live on youtube.com/financial wars, and my Telegram posts the link every single morning. So if you want to get a little bit more familiar with Zero DT, then let me know. I'm happy to help. And that Zero DT service that I run has over 1,000 traders in it now. And we do pretty well, man. I mean, we're maintaining about 90% win rates. The defense trades I'm really proud of. I'm really happy of. It's a lot of it's a lot of math up front, and I know it can be like drinking from a fire hose in the very beginning as a new trader. But I just did a 2-day masterclass on it last week. If I've got new members coming in, I'm always happy to teach the thing live. Make sure we're very familiar with the core strategy. So somebody actually asked me today, like, Chris, I've been liking the daily profit play, but now you added the defense trades. It's too confusing. And I was like, wait a minute. You have a core strategy and you're able to defend your losses. Like, what's confusing about that? Like, if anything, that's exactly what I want is I need to know that there are levels that we can defend. And that way, if I do take a loss because the market makers fail to do their job for the day, let's make sure that we don't get burned on that too, right? Because what they do is if they get burned on the day, they just roll that risk over and they typically always win the next day or the next couple of days. And they will, you'll see like the expected move and the implied move could be like 50 points and it'll go like 20 from plus to minus on the day. It's like market makers are so good at just, accepting crazy flows for one day and they just completely smash it back down and like get it within what they need the next day. It's like, I see this stuff. I've seen it literally for 3 straight years and they're great at their job. And so we need to side with that and understand like defense is awesome. Defense is in fact my favorite thing because I expect to win, but when I don't win, let's make sure that we're not losing a lot of money. Right. So anywho, good stuff. So youtube.com/financial wars exactly. And then I'll share my Telegram here. My public Telegram, Ken has his, I have mine. So if you'd like to join me for the mornings, it is free for everybody to attend. So here is my Telegram. If you'd like to come and check it out, and I'll do me a favor. If you come in, this week for the first time, channel per what? All right, I copied this. Let's see if you can join. Chris Pulver Telegram. See if that'll work. If not, you can reach out to support at prosperitybub.com and they can get you to my Telegram. Okay, perfect. So what I was going to say is we go live every day at 9 a.m. and there's a little prep. There's checking out the futures market, getting prep for the daily profit link, get my levels. The alerts goes out to members, but again, it's like this is what we've been doing for over 14 months. I've been trading zero DT since 2022, and I have logged thousands and thousands of trades. So it's always a dynamic process. You have to like learn from your wins. You have to learn from your losses. And at the end of the day, what I've learned is I don't like to lose. I don't like to lose big amounts. And I like to know that if I'm going to lose, I want to make it manageable. If I want to win, I expect to win. It's like, let's trade high probabilities. So everything that I'm doing is like very probabilistic. There's not a lot of like there's not a lot of guessing. It's like these are all within the options market, all within the probabilities, and then doing some rough calculations based on the dynamics of the volatility index. So again, come check it out. Like I said, it might be drinking from a fire hose out of the gates, but I can promise you that with over 1,000 traders that love it, and I know 30 plus students that have made it like literally the only strategy that they do. It's their bread and butter every single day, and I've got members that are making thousands of dollars a day with it. It's not me. I'm not that guy. Like I'll make a couple $100 a day. I make anywhere between 500 to a couple $1,000 a week. It just depends on what the setups are like. But I'm also happy with that. Like I'm not going to go all in on zero DT because I've got other stuff to manage. But point is, it still works, and it's been a really, really enjoyable service because it also takes away all the noise. Like Kane, you do such a great job of ignoring a lot of stuff, like noise wise. And one thing I say with zero DT is, doesn't matter what Trump says, doesn't matter what the Fed's going to do, doesn't matter what the market's going to be. It's like every single day there's a job and a task by the market makers to do their job, which is keep things within an expected range. And this is what happens most of the time. So, if the market's going to be down 20%, we can probably make money most of the time. In fact, during March and April sell-off, we still won 91% of our trades during the craziest markets we saw like this year. So I take a lot of pride knowing like this can help us survive a lot of stuff, and you don't have to worry about tomorrow. You just trade today and you try to win today. So speaking of that, Kane, I think we're going to try to win today. I'm hoping that price will stay below 67.10. We are right. We are right against it. We're at 67.05 into the close. So we've got about 29 minutes left. But anyway, dude, thanks for coming into the GAM report. I know, I think we're still planning on doing this on Mondays. I know you and I, we'll talk more offline on like the opening playbook stuff for the build a trade, but I'm excited about that.
Yeah, it sounds like a lot of fun.
Cool. All right, man. Let's have a good week, everybody. Holiday trading, just be aware of that. Let's get some, if you want to trade some zero DT, I'll be live every day through Wednesday and then back on Friday. Kane, whatever you, man, hit me up. We'll talk soon.
Sounds good. All right. Bye, everyone.
Thanks, everybody. Bye.
All right, folks. My webcam is not hooked up. I don't even know where my webcam is. I think it's up top here. Oh, I got it. Okay. Hopped on at the end. Close it up here. I think that's working. Cool. All right. We're good to go. Oh, maybe not. All right. We're all set. There we go. All right. Well, thanks so much, guys, for being here for the Gamma Show. If you guys have any questions, let me know in the chat. Other than that, I'm gonna wrap it up. So I gotta finish up hosting Alex and Jeff. So